We've been hearing slightly less news about Toronto real estate in the past couple of weeks, and that might be because the August data came out pretty mixed. But even though things didn't change as much last month, we're currently down 16% from the peak, and that is not a small number at all. Plus, we anticipate more bumps ahead in the short term because the Bank of Canada doesn't seem to be done with rate hikes just yet. And so this is a heads up. If you're thinking about making a quick buck over a short period of time, don't do it with real estate. I know we're a real estate sales brokerage, but we honestly don't think this is a good idea. And so here is a video all about why short-term investing with real estate doesn't make sense. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so that you can see more videos like this made specifically for real estate investors in Toronto. Toronto freehold prices have dropped 21 to 27% from the peak so far, and right now 416 semis are currently the leading loser. Some people might feel like this is just the beginning, but we're talking about a house that was priced at $1.5 million back in March, and now it's worth close to $1.1 million, and that's a $400,000 price drop. And so we would have to disagree. When we dive into the August TREB data, we are starting to see some signs of price support. Once 416 detached homes fell back to 2020 levels in July, buying action came back in, which led to a 9% increase for August, and now it is hovering around Q2 2021 levels. On the other hand, 416 semis didn't fall as much in July compared to everything else, and now they are playing catch up with a bigger price drop in August. Basically, buying action picked up a bit and listings remained low, and that's what's been propping up prices lately. But we just saw another big rate hike in September, and it's not over yet. The Bank of Canada is sounding more hawkish lately, and that has led major banks like BMO and TD to revise their target rate projections upward. And these rate hikes will continue to weaken holding power. This can translate to more selling action on one side, and buyers are also getting hammered with a lower mortgage ceiling on the other. And so it is possible to see prices continue to fall in the short term. Now, day traders do prefer a volatile market, and so sometimes we do see people who come to us wanting to time the real estate market and flip real estate. But the numbers do not really work in the short term. Here's the thing, real estate has high transaction costs, which is one big difference compared to other asset classes like stocks. In Toronto, you're looking at around 3.5% to 4% that goes to land transfer taxes and closing costs when you buy, and then when you sell, you'll have to pay buyer and seller agent fees, which is around 5 to 6% of your selling price after HST. So if you buy a house for $1 million and you make 10% or $100,000 from flipping it, you end up barely breaking even after fees and taxes. You also need a lot more money to invest in real estate, and it's a lot more active work compared to investing in stocks, so it's pretty hard to make a short-term horizon worth it. Now, instead of gaining 10%, let's see what happens if the market takes a downturn and erases 10%, which is pretty likely these days actually. In this case, you end up losing $185,000, which is almost all of your initial capital. And this is a huge likely risk that we would rather you not take. Now, we on our team are real estate investors ourselves, and we do it because the numbers do make a lot of sense as a long-term investment. Take a look at these numbers. Net rent yields are around 5% in Toronto these days. Average appreciation is 7%, and so total returns are around 12% per year before leverage. Of course, appreciation isn't guaranteed, but based on fundamentals, with limited land to build in Toronto and our government's aggressive immigration goals, we'd say it's a pretty safe assumption that prices will continue to go up over time. The other thing I wanted to bring up is the fact that you do get two buckets of returns when you are a long-term investor: rental income and appreciation, and these often move in opposite directions. So what we have here is more stable, better risk-adjusted returns compared to other asset classes. Now, if we go back to the fees and taxes that made short-term real estate investing not really make sense, they still exist for long-term investments. However, they do get diluted over time, and so if we distribute them over 10 years, then we are looking at a much more reasonable, approximately 1% per year, and the better risk-adjusted returns that you can get with real estate do justify this cost. Also, keep in mind that if you are using a mortgage to fund your investment, your rate of return can also improve. Take a look at this chart that compares returns if you were to buy with cash versus buying with a mortgage over a 10-year horizon, and you can see that you end up much better off using borrowed money. Just remember that leverage works both ways. You can be better off with borrowed money when you make money, and you'll be much worse off if you lose money. And that's why you need to have strong holding power so that you can ride through the bumps and reap the long-term benefits. If we go back to the opportunities right now, I'd say the biggest benefit for buyers these days is that the ball is in your court. What you see as the list price might not be what you'd actually be paying for, and it's very possible to bargain for more discounts with less competition. You can also take more time to think through things before putting in offers, add in conditions if necessary, and generally relax more during the buying process. But given that we will probably see more downward pressure, you might still think you'd want to wait for a clear bottom, which isn't a wrong decision. Just note that at that point, more people will want to get into the market and the buying experience won't be the same anymore. Prices will be on an uptrend by then, and you will feel more pressure to act more quickly and possibly end up buying at a price that is higher than what you can bargain for today. So if you are thinking about buying real estate soon and you want to understand more about what's happening in Toronto real estate and where the best deals are, we'd be happy to help. We are a real estate sales brokerage that focuses on investing in freeholds in core Toronto, and we can help you see things more clearly and match you up with the best investment property for you. After we help you buy, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.